What's up guys, Dirk here from intelligentcryptocurrency.com, and in today's video it is going to be a tutorial of how to use Binance to be able to trade with leverage. Now, first of all, before I get started, trading with leverage is highly risky. It is not recommended if you are not experienced with trading and if you don't know what you're doing. Normal trading is already incredibly risky. Cryptocurrency is highly volatile. Adding leverage to it, if you don't know what you're doing, is basically a recipe for you to lose a lot of money. So be aware of that, be aware of the risks, and everything that you do, of course, at your own risk. I want to show you how this works, and what you do with it is up to you from there forward. So to be able to get started trading on Binance, you obviously need a Binance account. Now, you can go to Binance.com or the link in the description below, so you'll be able to get some kickback on fees also if you use my link to sign up and create a Binance account. But whether or not you already have one, you're going to need this account. Now, this is not available for US citizens, but Binance do have Binance.us for people in the US. I'm not familiar if there are any differences between the trading or not, since I am not from the US, but you can give it a try and see if it does work out the same. Now, on Binance.com, they have a thing over here, so you're able to trade derivatives, and you can see over here you need USDT futures, you have US coin futures, you have leverage tokens, and you have the ability to just trade all sorts of coins with leverage. Now, we're going to be talking specifically about USDT futures. I would not recommend using leverage tokens, and if you're going to do any sort of leverage, this is easier. So you head over to the USDT trading section over here. And if it's your first time with your Binance account, you will need to open the futures account over here. So you'll need to just simply click on open now. And once you've done that, you've already opened it. It's as simple as that. Okay, so what you'll need to do now is you'll need to transfer funds into your account, and the futures trading works with funding in USDT, so that is Tether. Now, you can either send Tether straight to your Binance account and fund the account that way, or you can simply take something like Bitcoin or Ethereum or any other cryptocurrency and sell it for USDT and transfer that into your account. So you can see this is a brand new account that I just created, and my balance for trading is 0 at this point in time. Now, the options with coin futures, as you can see over here, there are currently only 7 different coins that you can trade with leverage as futures. So that's Bitcoin, it's Bitcoin Cash, it's Ethereum Classic, it's Litecoin, XRP, and EOS. And these are the ones that you can trade with large leverage. So I'll walk you through how it all works in terms of the leverage and what you need to do there. But just be aware, if you want to trade with leverage, you're using USDT as a base, and you have these 7 options available with Binance. We'll have a look at some of the others, the coin futures, a little bit later, where you actually have the ability to trade different coins, more of a variety of coins than these, with a lower leverage. So what we're going to do first is we're going to transfer some funds into this account. So in order to do that, you need to go to your wallet, and you need to click on USDT futures. So we're going to transfer some funds into the futures wallet. Now, as you can see over here, to start trading, please transfer assets into your futures account. So what I recommend that you do is you can, like I said, you can either buy crypto, and if you don't have anything yet, so if you click on that, you would need to purchase either with your Visa card, peer-to-peer trading, or other payments, and you would obviously need to make sure your account is in order and verified enough to be able to purchase that. But you can see over here, so you can spend and you can buy, you should be able to buy USDT right over here, right? So I can go and spend whatever. If I want to buy $1,000, I can buy USDT and get it added to my account right there with a Visa. Very, very easy to do. But since I already have some USDT ready for this tutorial, obviously to save time, what I'm going to do now is I'm going to just go back and I'm going to transfer that USDT from my spot wallet back into the futures account. So I'm going to click over here on transfer, and I'm going to say I want to transfer from my spot wallet to the futures account. You can see I have $319 over here. So let's just make that transfer It's instant and it's free. Okay, so you're just transferring between your Binance accounts. So you can see over here now I have $319 to trade with in my futures account, and this should reflect. So let me refresh this really quickly, and then it should be there. So you can see now my futures account has $319. Now, the nice thing about this is you can basically preload your futures account with whatever you want to risk. Okay, so if you want to trade futures and you want to give it a little try and you want to put in $100, that is what you risk. Okay, you put in your $100, so you can put in 1,000 or 10,000, 100,000, depending on how much you want to risk. Of course, keep in mind this is highly volatile, and even with trading, most traders, they put in maybe 10% of their total crypto portfolio into trading, and that's if they're experienced, right? So you're not going to take your entire allocation and put that into a futures account. Futures trading is super risky. Crypto is already volatile, and we've seen sometimes crypto moves 10-20% in a single day. And of course, if you're trading with leverage, that's going to get your stops hit no matter how big your account is. So you can't trade too big. Proper risk management is key. Okay, that's the most important thing. No matter how good of a trader you are, losses are part of trading. And if you don't manage your risk appropriately, you are going to lose your account. No matter whether you have $100 or 100,000 or 100 million, you will mess up if you don't manage your risk properly. And what is recommended for risk management is whatever your trading account risk capital is, you shouldn't risk more than 2% on a single trade. So let's just say that you have a $10,000 trading account. That means for a single trade that you take, you should not risk more than $200. This means that you can lose over and over again without risking your account. It basically gives you enough of a bankroll to be able to sustain your trading hobby or career, whatever it is that you want to call it. And if you're risking 2% a trade, that means you can lose 10 trades in a row and still only be down 20% of your overall bankroll. And if you're losing 10 trades in a row, there's something wrong with your analysis and you should be looking at, doing something differently. So if you want to learn about trading, if you want to learn about risk management, I've got a complete course about it, about trading, technical analysis, and risk management as part of my Intelligent Cryptocurrency membership. If you want information on that, it is the first link in the description below, or simply go to intelligentcryptocurrency.com. Now, the interface is pretty simple. It works pretty much as most trading platforms do. So up here, you have your choices of which instrument you want to choose. Then you can choose your leverage, okay? So you can see over here, you can go all the way from 1 all the way up to 125x. Now, needless to say, if you're trading anything at 100 to 125x, that means, yes, you can trade with 125 times more capital than you have, meaning that with $300, I can trade with as much as $30,000, but it works both ways. It's a double-edged sword. Yes, I can make more quicker, but I can lose it just as quickly. And with the volatility in crypto, trading at these kind of leverages is completely not recommended. Even something like 25x is still highly, highly risky. So once again, I just want to warn you about that. But this is how you choose your leverage over here. And you can set it low, right? You can set like a 5x leverage. That's fine too. Okay, so let's just say we confirm, we set it to 5x. Then you have cross or isolated. What this means is cross basically means that whatever position you take is limited to the entire balance of that you funded your futures account with. But isolated means that you can have multiple positions and the loss that you can take is set to that individual position. So for example, I have $300 in the account. If I take a cross margin, it basically risks the entire $300 of the account. But if I take an isolated position, I can take a single position and, for example, only risk $50 or $100 on a single position without risking the entire $300 in my account. So just be aware of that. It's whatever you want to choose depending on your strategy or your style. And then up here, basically you have the normal limit order or market order. Once again, market just buys at market. It's not recommended because it fills at whatever price is given, and usually that is much worse than you can get if you're patient. Limit orders just work in the same way. You can buy or sell, buy or long over here very easily. And then on the right, you have stop limit orders, stop market orders, which is basically a stop loss once you've increased your position or taken your position. And then that's basically your orders. And you can see over here, there's a little calculator. So based on your entry price, your exit price, the quantity that you trade, and your leverage, it'll basically tell you how much you're able to win or lose, your liquidation price, your target price. So it gives you all these little tools over here. So we can see over here, let's just have a look at, for example, Ethereum. And you can see right now this is a 20x leverage right now. So at 412, the maximum that I can trade is 15 Ether worth, 15.46, okay? And that would basically risk my entire $319, but it allows me to purchase 15 Ether. And at current prices, 15 Ether is currently worth about $6,000, right? So you can see, and that makes sense. It's a 20x, so 20 times $300 is just over $6,000. That is what I can trade with the account. Obviously, at a 20x, my stop loss is a lot closer. So that means, yes, sure, I can make more money, but I can also lose it. So we can go to a little calculator here, for example, and let's say a 20x, okay? And it's currently 412. Let's just say the price goes to $440. I'm trading with 15 Ethereum, and I'm taking a long position. You can see over here that this would basically give me a profit of $420, which is just more than 100%. It's 135% on my initial margin. Now, the downside is that means that this is $28 to the upside. That means my stop loss is going to be less than $28. You can see over here the liquidation price, and you can calculate this over here once again. So 412, let's just say there's 15 Ethereum, and we calculate my liquidation price would be 392. So if it drops from 412 to 392, I would lose my entire balance. But on the upside, you know, if it goes to $440, well, then I can make $420 in profit. But let's just say I think it might go to 500, then you can see exactly what's going to happen. Then I can make $1,320. Now with trading, you always want to aim for a higher reward than your risk. So if I'm going to be risking $300, well, then I'm going to make at least 2 to 1 or 3 to 1 if I'm right. So that means if I'm wrong, I only lose one single unit. But if I'm right, maybe I make 3 times as much or 4 times as much. This allows me more room for error with my trading. And it means that even if I'm only right 50% of the time, but because I'm making at least 2 to 1 or 3 to 1, that means I can still be profitable only by being right 50% of the time. And this comes in with position sizing, risk management, all that kind of stuff, which if you want to learn more about, simply just join my Intelligent Cryptocurrency membership. You'll get access to all the courses and the training and stuff in there. And quite simply, you know, you have your different time frames. The chart isn't super interactive. That's why I like to use TradingView. It's pretty easy. I have all my charts in there. But, you know, there is a basic chart over here with different time frames, and you can add in some moving averages and stuff like that. So this is basically how you use Binance Futures to be able to trade. You've got all your instruments over here, your calculations, and that is how you do it. So if you want to trade altcoins with leverage and you want to have more options than you just have with the 7 coins in futures, what you just do is you simply go to the Binance exchange, and over here you have the option to be able to trade with leverage. And this leverage isn't as high as with the futures, but it gives you somewhat of an increased leverage tool if you want to be able to use it. So for example, I would go to USDT here, for example, and you can see I have the option to trade spot, which means literally just 1-for-1, no leverage, or I can trade with as much as 3x leverage. So you can see over here, I need to enable AVE USDT isolated margins. Transfers, borrowings, and transactions with this isolated margin account are limited to the trading pair. The risk will also be controlled in this isolated margin account. So this option is here if you want to take leverage trades on different altcoins. So let's just take, for example, ICX USDT. So you can see over here, you can trade ICX spot against, for example, USDT, but you can also trade it with as much as 5x leverage. And again, you'd need to open this position over here on the specific coin, but this allows you to trade individual coins with as much as 5x leverage. And again, why would you want to use leverage? Well, if you're an experienced trader and you have a specific trading strategy and you stay within your risk management and all of that, it basically gives you the opportunity to be able to take larger positions with less capital. And this allows you obviously to get larger gains, but also a thing that some traders stick by is because it's cryptocurrency and there is risk in keeping funds on an exchange, it basically allows you to take larger positions with risking less capital on an actual exchange. So if you want to take a trade with ICX, you can keep 5 times less collateral on the exchange, meaning if something were to happen to Binance, for example, you would only be at risk of losing far less. Now, this isn't as important for very small traders, but for people who are trading with hundreds of thousands or millions of dollars, they might not want to risk millions of dollars keeping them on an exchange for a trade. So perhaps they will take some leverage trades. That's just one of the reasons why people do use leverage with trading. So you can see over here, when you open the position, it basically tells you, welcome to Binance Margin, pass the quiz with 100% correct to start trading margin. Watch the margin video to learn more. And you can obviously, it tells you what to do, and you can start the quiz. And once you pass the quiz, you'll be able to start trading. So once you complete the quiz successfully, you will be able to have access to this. And what you can do is you can borrow to be able to make the trades with leverage. Once again, this is something that's really not recommended unless you have experience, unless you know what you're doing. You don't want to be borrowing and working with leverage like this. I just wanted to show you that in case you do know what you're doing and you are experienced and you want to explore this further, the possibilities for being able to do this are available. So guys, that is how easy it is to use Binance to be able to trade futures and to be able to trade with leverage. Once again, it is highly risky. It is not recommended if you don't have experience. Always make sure that risk management is the most important priority for you. Okay, so never trade with anything that you can't afford to lose. Stick within your trading capital. Stick within your risk management. No more than 2% of your trading account on a single trade. And if you are going to start with this, just do it with a few small amounts first. Do a $10 trade or a $5 trade to be able to understand the platform, to understand how everything works with the leverage and the right settings before you end up trading big and making possible mistakes. So once again, if you are looking to get started, sign up with a Binance account. Use my link in the description below. You will get cheaper kickbacks on fees if you use that link. And if you do want to continue to learn more, you want to learn about trading and risk management and technical analysis and how to read charts, look at my Intelligent Cryptocurrency membership. Consider joining that. I've got a complete 20 lesson video training on profitable technical analysis patterns, how to identify them, risk management, trading, and that's just one part of the membership. I also write a monthly newsletter. I've got a private chat community and much, much more. So once you're in the membership, you get access to all of that information, and it comes with a complete 60-day money-back guarantee. So there's absolutely no risk for you. Come sign up, go through the training, learn everything that you want to learn. And if you're not happy, you can get your money back. And if you are happy, which I hope this is the case, because there's a lot of value in there, well, then you can continue to stay on as a member and continue to get my research and information and support. So hopefully you enjoyed this tutorial. If you did, please smash the like button and leave a comment below. I'd really appreciate it. It helps the algorithm. And if you're not yet subscribed to the channel, consider subscribing below. It's 100% free. Click the notification bell after you subscribe and you will continue to get future updates. Thanks for watching. I hope this was helpful and I will see you in the next video.